a royalty from 4.5 to 5.25 over a period of time. Rejected. Stocks up at the day's highest point, 1.5% higher. But Mangalam is joining in, who tracks the space, the sector, the company closely. Mangalam, morning.
Good morning. So, this is a positive development that is coming from a Nestle standpoint, and that's largely because in a staggered manner, the increase in royalties 0.15% of sales every year. That would take the margins off by about 0.15%. And this at a time when, raw material prices had begun to rise for Nestle, and the margin triggers were looking a lot less or a lot limited than what it was, say, a couple of years ago for Nestle. The street thought that maybe the upside triggers for the margin, because it was limited and the stock having seen an outperformance earlier itself, was making a lot of analysts a little skittish on the way forward for the Nestle share price itself. We had posed this question to Suresh Narayanan, that in light of increased raw material prices, is there a possibility that the company would review that? He had categorically denied that time, saying that, 0.15% of sales is not a very big ask. And in fact, with the kind of global products that are coming in from the Nestle's portfolio, the Nestle global portfolio, this was something which was only fair. But shareholders seem to have rejected that. And this immediately provides a margin trigger of an upside of 0.15% every year. And apart from that, the fact that shareholders have rejected this would make the company reconsider any increase in the future as well. So that puts this matter to rest for now. So that trigger, that the fear that there was that this could be increased disproportionately in the future as well, now rests because of the shareholders' move. So this is definitely a positive. 0.15% of margin improvement over and above what the analysts were expecting because of this is the immediate upside. But beyond that, the long-term positive is that any sort of increase in the future, the company will consider.
Absolutely. And Mangalam, thanks very much for that. So it is at the margin of positive. I mean, it's not a whole, it is at the margin of positive. I mean, it's not a whole lot, it's not huge in that sense when you look at the overall scheme of things. But, markets and stocks, of course, price in incremental news developments. So in an incremental kind of a way, this is, of course, positive. There's no doubt about that. And of course, I mean, it sends a message as well that, shareholders, of course, are vigilant and active, and they're voting on important matters like this. So that's essentially what's come through. Stocks now starting to react a little bit more. From the time that the news broke, stocks up about 1.5% or so.
And it's an overwhelming thing. 70% of the public shareholders have voted against this resolution. And as a percentage of the overall, it's about 57% of the shareholders have rejected this increase in royalties. So they voted, and they voted, very clearly that they don't want this increase, the staggered increase over 5 years.
Absolutely. I think Deepan is with us. Deepan, any thoughts? Quick one. Nestle?
I liked your comment that basically shareholders are vigilant. And this has not happened earlier. I've seen how MNCs have treated minority shareholders in the past 30 years or so. They have set up 100% subsidiaries and charge royalties and whatnot, whichever way they could take a higher share of the profits. In the case of Maruti, they set up a separate company as well, which now they decided to merge. So I think this is great news, and I think really sets up the corporate governance standards in India. And hopefully a lot of other MNCs also will take cue and not take local shareholders for granted.
Absolutely. Defense is coming back up once again in a strong way, right? So if you can have these names up, BEL, that is